into. Can you guys hear me?
It cut out briefly, but you said you were looking to.
Oh, okay. So today I was looking to buy some gold in the market, and this was the analysis that I did for today. Obviously, I'll show you how to do the analysis and things like that. But do you guys remember that I said that we've got technical analysis and fundamental analysis has got to do with what?
Was it the news?
The news. That's right. Are you recording, by the way?
Yes.
Okay, that's great. All right, so fundamental analysis has got to do with the news. So today in the news, there was CPI. Remember the red boxes and
Yeah.
the yeah. Today in the news, at 1:30, CPI came out, and it was a red folder, meaning that it was a high impact expected. So it was really. You see this big candle you can see over here, right?
Yeah.
Yeah, that's it. This from this point all the way to the top. Obviously, it ended here, but from the top all the way to that level, it happened in about 3 minutes. So that's the impact of the news. Anytime you see a red folder, that's how impactful that folder is. It means that there's a lot of volatility in the market. The market can quickly go up or quickly go down. So that's what happened today. But yeah, let's go back to uh, actually, yeah, let's go back to hold on one second. I just feel like my network keeps coming in and going out. Or is it just me? Do you guys hear
Uh,
me, by the way?
right now, as of right now, it's fine.
Okay, all right, cool. Anytime there's if it's cutting or anything, just let me know.
Okay.
Um so what I'm gonna do, I'm gonna stop sharing my screen and I'm gonna just share the screen that I want us to use for today.
All right.
Because so that helps with the recording. Okay, great. Okay, can you guys see the screen up here?
Yep.
Okay, that's good. All right, cool. So last week, when we spoke about different things, right? And we spoke about the lower time frames, and then we spoke about the higher time frames. So today, what we're going to do is we're going to continue from where we ended last week. Remember, last week we mentioned that the market is a place for buyers and sellers, right? So
Hmm.
people come to buy products and people come to sell their products, right?
Yep.
So, for example, if I come to the market and somebody has a phone that I need, I have to come with money to give to the person. The person gives me the phone, and if the price matches the amount that I have, we exchange the product. It's the same way with the market. The market is made up of private networks like the bankers and big corporations. And because we are day traders, we don't have the amount of money that these private network and bankers, they can spend. So what we do is that we have to actually trade through a broker, right? So some of the brokers that we use, I'm gonna share this screen with you again. Some of the brokers that we use include, let me share this one again. Second. So some of the brokers that we use include okay, yeah, some of the brokers that we use include we have what's it called? Okay, can you guys see the screen here?
Yeah.
Okay, all right, cool. So some of the brokers that we have IG is a broker. We've got Pepperstone, we've got IC Market, we've got XTB, we've got Ava Trade, we've got CMC Market, we've got Forex.com, we've got eToro, we've got Saxo Bank, we've got Xness, we've got a lot of brokers, right? And what these brokers do is that they serve as the middleman between the retail traders and the big private networks, right? Because we don't have the money to be able to compete with the private networks. These brokers stay between the retail traders and the private networks, and then they take the money that we want to put into the market, and then they help us to trade. So if you want to start trading, there are three things that you will need. And the things that you will need will include, let me change this screen. Okay, so there are a few things that we will need when we are trading. So number one, to start trading, you need a broker, right? And this includes IC Market. You've got these are all brokers that you can use. And then number two, you need TradingView. So TradingView is what we are currently working on at the moment. This is where we are right now. This platform, this app that we're using is called TradingView. That's where we take our trades. That's where we do our analysis, our technical analysis. And then number three, all you need as well is a Wi-Fi. These are all the things that you need to start trading. So you need a broker who will be the intermediary or the middleman between yourself as a retail trader and the private networks like the banks. And then the trading platform, which will be TradingView, which we are currently on at the moment, and then obviously a Wi-Fi. Now, what happens is that if you want to trade an actual funded account, whatever money that you have, you register an account with these brokers, right? When you register an account with these brokers, they give you an opportunity to put any money that you want to trade or start trading with in their account. So what happens is that once you do that, they will show you platforms where you can actually enter and exit the trade. So platforms like MT4, which is MetaTrader 4, MetaTrader 5, are platforms that we use to take active trades. So for now, just keep that in mind, that to start trading, things that you need will be a broker, which will be IC Markets or Onda or Forex. You need TradingView, you need a Wi-Fi, and then the medium for which you're going to be trading will be from MetaTrader 5 or 4, but I usually use MetaTrader 5. So this is what you're going to be taking your trades on. Okay, all right, we'll put this one to the side here. So we spoke about the fact that the market is made up of buyers and sellers, right? So if you go into any platform, you're going to have, if you go into the market, you're going to have buyers. And then you can also have sellers. You have buyers and you have sellers. Now, this is the market. And this is how you should see it. Anytime anything goes above the market, it means that buyers are in charge of the market. Anytime anything goes above the market, it means that the buyers are in charge of it. Anytime, we're just using this line as a market, right? And we're saying that anytime the buyers are above this line, it means that buyers are in charge, right? And anytime sellers are below this line, it means that sellers are in charge. So it means that anything above here, sorry guys, let me just delete this one for now. It will make sense very soon, just bear with me. So we're gonna make this one, let's make this one green. So anything above this line it means that buyers are in charge, right? And then anything, let's come on, actually let's just make it don't worry about the drones, and I'll show you all of that. You get used to you get used to all these things. So anything below that line, anything below this line, it means that sellers are what? Sellers are in charge. That's what it means, right? So when you look at the way that my settings are done, you can see that it's usually mine is like gray and black. The gray candles, these things are called candles, like we spoke about last week. These things that you see are called candles, right? The gray candles represent the buyers, and the black candle represents the sellers, right? Hold on 1 second. I think somebody just messaged me in the chat. Let me see if it's okay. No, that's fine. So the gray candle represents buyers, and then the black candles represent the sellers. So don't forget, anytime this is the line between the sellers and the market. Anytime anything is above this line, buyers are in charge. Anytime this thing is below this line, sellers are in charge, right? Don't forget that. I'm gonna drag this one to the top as well. Let's put this one here. Now, I'm gonna draw these things here. We're gonna make this one green. And we're gonna make this one red. So usually in the market, if you look at like different charts, right? This is how the candles are gonna look like. They're usually gonna be red and green. That's what usually that's what it will look like. But obviously my settings are different because I just want to trade with the black and gray. And you can do the same as well. At some point, maybe next week, I'll show you how to go through all the tools. Thank you for maybe we can start that today. Yeah, we'll do that today. But let's just begin with this for now. So this is what a candle looks like. Anytime a green candle, you see a green candle on a chart, it means that the buyers were strong. Anytime you see a red candle on a chart, it means that the sellers were strong. Now, a candle is not just a candle by itself. Sometimes you see candles without no wicks, right? But sometimes you're going to see a candle with a wick. And the wick can be either small, long or short. The wick can be either long or short. I'm going to explain to you why that is in a second. So let's make this green as well. I hope you guys are following, by the way.
Yeah.
Okay, great. All right, cool. So the candles, actually, it will make sense. Let me change this. Let me make it look more like what it will look like on the chart so that you guys don't get confused. Yeah, it's better this way. So the candle has a body and has got a wick. This part of the candle is called the body. That part of the candle is called the body. And then this part and this part of the candle is called a wick. It's just like a normal candle. If you've ever seen a candle before, you realize that it's got a body and it's got a wick. So the wick is the part where you put the fire, right? You light the match and then you attach it to the wick, and then the wick slowly burns the body of the candle. The same way, the same concept as the body in trading, right? So the body is there and it's got a wick. And this part of the candle is the open and the close of the candle. So the way that the candle works, right? Remember the time frames we showed ourselves last week. If we go on the daily time frame, right? It looks messy, but yeah, if we go on the daily time frame, this candle is currently being formed and it's going to finish in 5 hours and 41 minutes. If you go on the 1 hour, this last candle that is being formed, this particular one that is being formed, is going to be done in 41 minutes and 46 seconds, right? And if you go on 5 minutes time frame, this candle that's being formed, which is in this case the red candle, is going to be done in 1 minute 30 seconds, right? If you go to the 1 minute time frame, this candle that is being formed right now, this small thing that's being formed here, it will be done in the next 20 seconds. So once that 20 seconds comes up, a new candle will begin to form. Now, the different time frames determines how fast or slow the candle will move. So on a smaller time frame, the candle moves really, really fast. On a larger time frame, the candle really moves very slow because it takes 1 minute for this candle to be completed for a new one to be formed. But then on the bigger time frame, it takes, if you go to the daily time frame, it takes a day for one candle to be formed. On a 4 hour, it takes 4 hours for one candle to be completed. But then if you go to 15 minutes, it takes 15 minutes for one candle to be completed. But then on the 1 minute, it takes just 1 minute for one candle to be completed. So this means that the time frames determine how fast a candle completes formation. And anytime a candle is being formed, it opens and it closes, right? So for example, this black candle that we saw here, it opened from this point and then it closed at the bottom, right? And then a new one is being formed right now. This new one opened at this level and it is still forming, it's not completed. Let's see where it's going to end. But don't forget, it started from this bottom, right? Let's see where it's going to end. Okay, so this is where it ended. So you can see that the minute it ended, a new one was being formed, right, from where it ended. But then you can also see that there was a wick that shows on this particular candle. And the reason why there is a wick there is it indicates that the market or the candle went to that level, but then it didn't close from the level. So the candle is made up of opens and close, and then the wick represents where the candle has been. Do you understand? Does it make
Yeah.
sense?
So would it be like how high the price reached or how low it
That's
got?
it. So that's the price that this particular candle, that's where it reached. But then it didn't close there. This is where it closed. But then it moved all the way to this level, all the way to this level here. Let me just draw a circle around it. So this particular candle, when it started here, it opened from this last candle. Let's make it quite bigger so you can see. So 1, 2, 3, right? This candle, yeah, was the last candle that formed before this candle started. This candle's opened from this point. This is where it opened, right? And the reason why it opened from here is because this candle opened here and then it ended here. So when this candle ended here, this new candle, that's where it opened. And then when it opened, it went all the way to the top, but then it wasn't able to close there. It came back to the bottom and then it closed below this starting point. That's why it is a red candle. That's why it's a black candle, right? So that's where it opened from here, it went all the way there, and it closed from here. When it came to this candle, it closed here. This candle closed from here. This one opened here where it closed, and then it took the candle all the way to that part where it isn't the circle, but then it didn't end over there. It closed from here. So the wick is a representation of where the candle went, but then it doesn't mean that that's where the candle ended. Let's use these live examples as an example. So don't forget, this is the one that is currently being formed, right? It started from here, right? Let's see what's going to happen with it. Let's see where it's going to go and where it's going to end. Just pay attention to it. It's going to be done in the next 30 seconds or so. So the candle is a movement. It goes up, it goes down, it goes up, it goes down. But then it opens and then it closes. And then it shows where the candle has been as well. So that's what we are currently witnessing. Where it opened, but we don't know where it's going to close until the 1 minute is up because we're on the 1 minute time frame right now. when the 1 minute time frame is ended, it will move to the next candle. Because remember, the 1 minute time frame moves faster than the other ones because they're higher time frames. Let's see what happens with this. Okay, so that one has ended. And then a new one is being formed. So you see where it ended, right?
Mhm.
The minute it ended here, this candle also started from where it ended. But then this particular candle that formed, it means that I'll go into the candle formation, but for now, just know that this candle started from here and it ended at the same level. It means that it didn't go above it and it didn't close below it, right? Okay. You understand all of these things, but for now, just keep that in mind. Now let's go back to what we're talking about. Okay. So the formation of candles, there is an open and there is a close. In order to form a green candle, the candle would have to close above the opening point. So in order to form a green candle, the candle will have to close above the green point. Let me show you. So this candle opened from this point. It opened from this point, and then it closed at this point. And then this candle, because it's a red candle, it opened at this point. And then it closed at this point. So for a green candle to be formed, the closing of the candle would have to be above where it opened, right? So this was the opening part. And this was the close part. Then this was the opening part. And this was the close part. Let me move this one to the side.
Hello.
Hello, Jimmy.
Yeah,
Are you
Jamie, can you
the
mute
session?
yourself?
Oh, all right. I'm just gonna leave because I'm currently out right now. All right, see you there.
All right, I'll send you the call later.
I'll be able to copy the whole thing. I don't want to copy this. Okay. No, no, do not right thing. Yeah, there we go. No, that's not the right. Sorry, guys. I'm just trying to copy the whole thing. Let's put this here. Yeah, there we go. Okay. What's happening? Okay.
Then you have to
Okay.
like
So
click on the
yeah,
lines all around.
I'm clicking on it, but it's not moving it. I don't understand why.
Try
Yeah, there
click
we
on,
go.
yeah, there we go.
Okay. So in order for a green candle to be formed, the candle would have to open from here and then close above it. And then the wick is a representation of where the candle went, but that's not where it closed. It's the same thing with the red candles. In order for a red candle to be formed, the close would have to be below where it opened. So this candle, when it was being formed, it opened from here and then it closed from here, right? And then immediately it closed, this new candle started forming, but then it opened from here and it closed there. And that's a representation of how green candles are formed and how red candles are formed. So the candle is made up of the body and the wick. The green candle, the close is always above the open. The red candle, the close is always below the open, right? Okay. Does it make sense? Do you guys understand? I
Yeah.
hope you do. Okay, great. So that is the candles. Now let's try and see if we'll be able to talk about some of the tools that we use in TradingView. So TradingView, you can go to the website and you can just go on the internet and type in TradingView, and then you'll be able to have access to the TradingView platform. I'll try and show you guys by the end of this lesson how you can go about that. But then also you can also download the app and then obviously sign up for an account with TradingView and then begin to use it. But there are tools that are used for trading, and the tools can be found on the left-hand side of the TradingView app. So we've got the dots, we've got the arrow, we've got the demonstration, we've got the eraser if you want to erase anything. We have the cross, we've got the different lines as well. So we have the trend line, we've got the ray, we've got extended line, trend angles, we've got horizontal lines. We've got this one as well, which is the favorite tradesman. So these are all tools that are used like in trading. You don't necessarily need all of them for trading. So as you continuously, get into the trading journey, you guys will be able to determine the type of tools that you want to use and the ones that you don't want to use. So for me right now, I only use a few tools, right? I use this tool, which is the cross. I use the cross if I want to draw something. If I want to select something, I use the cross to select it. I use the trend line as well. So a trend line, if I want to draw lines, I use the trend line for that. And I've got this as well, which is called a horizontal array. So horizontal array, I use it to mark some of the things that I'm doing as well. It starts all the way from here, all the way to wherever level that you want to take it to. You've got, these are very important tools, the long position and the short position. Now, the long position is anytime you want to buy a market, this is what the tool you're going to use. The short position, anytime you want to short the market, this is the tool that you're going to use. Okay, so we've got the path tool as well. Actually, let me show you how the path tool is used. So if we go to an actual market, if you want to draw things, right, if you want to see how the market is moving, you can use this tool to determine the trend of the market. That's what the path tool is used for. You can use it to determine the trend in the market. And if you want to use the trend line as well, you can use it to draw lines to determine where your highs and your lows are. You can use it to draw lines to determine where your highs and your lows are. So all these tools are not tools that you should be worried about right now. You get to understand them as you move on. So for now, to start trading, you need a broker. You can use IC. I use IC Market for most of the trades that I do. You need TradingView. That's what you're going to use. Obviously, you do your technical analysis. You use a Wi-Fi to get internet to be able to trade. You need a Meta 5 trader where you take your trades. And we've got the candles. We've got red candles and green candles, right? And green candles indicates that there are buyers in the market. And the way you know that there are buyers in the market in the formation of the green candle is that the market opens, right? And then it moves either up and down. But then when it closes above where it opened, it indicates that the market is a green candle. And when it's a red candle, it opens at the top and closes at the bottom. So anytime the close is below the open, that's where you know that a red candle is being formed. And the movement, the wick indicates where the candle had been and not where it closed. So that is what it is right now. Like I said, anytime there's a market, there are buyers and there are sellers. So in trading, we have bullish markets, right? And we have bearish markets. We have bullish markets and we have bearish markets. So let's make this one. The bullish market is when the buyers are in charge, and the bearish market is when the sellers are in charge. There is another market. So we've got the bullish market. Let me go to the bullish market, go to the bearish market. There's another market that I never trade, and I don't think any of you should trade. It's called the consolidation market. The consolidation market is a market that I do not trade. Now, bullish represent that the market is going up. So anytime you see anything like this, it means that we are in a bullish market. It means the market is going up, right? It's going up, bullish market. Now, let's try and copy these things as well. Okay, so anytime the market is moving in this direction is an indication that the market is going up. So it's a bullish market. It means that the buyers are in charge, right? And anytime the market is moving like this, I'm gonna make this one red. Anytime the market is moving like this, is an indication that we are in the bearish market. We are in the bear market, meaning the market is trending down. So when it comes to trends, we've got the bullish trend, we've got the bearish trend, and then we have the consolidation trend. So consolidation trend, we do not trade that. Consolidation trend is when the market is really confused, doesn't know what to do. So it doesn't know if it wants to go up or wants to go down. That's where consolidation market is. It doesn't necessarily have to be as uniform as this. It can be like this, or be like this, or be like that. It's just confused. It doesn't know where to go. So we don't usually trade consolidation markets. You have to ensure that with the strategy that I trade, I'll be able to explain to you the best time to trade the markets. Consolidation markets, you do not trade. Let's make this one blue. Consolidation markets, you do not trade. You only trade bullish markets or bearish market. So these are the trends that we have in the markets. We have the bullish market trend, we have the bearish market trend, and we have the consolidation market trend. Now let's go something. Let's find it. Yeah, this is good. Okay. So now remember what I did here, that anytime something is going up and down, up and down, up and down this way, it means the market is going up. Now, when it begins to do like that, then the downside, it means the market is going down. So let's do that on the main chart. Remember the tool that we used to do that will be the path tool, right? So this market is here. It went up here, came down here, went up there, came up here, went there, came there, went there, came back down here, went there, and somewhere down there. Let's leave it here for now. So the minute you see anything like this, what does it indicate? It indicates that the market wants to go down. It means that this is a bearish trend because the market is going down. It's a bearish trend. Now, if you see a market where it begins to pick up like this, goes this way, goes this way, goes this way, this is a bullish trend because the market is indicating that it's going up. So this is an indication of the market going down, which is a bearish trend, means that we're in the bear market. And then when it begins to break highs, you know that the bulls have taken place or taken over. So that becomes a bullish trend. Okay, let me now show you what consolidation market looks like. So if you look at this particular area, right, you can see the market is going up, keeps going up, but then when it gets to this point, there's confusion here, right? It doesn't necessarily know where it wants to go. So let's make this one dark color. Let's make it that color as well. So this area is what we call the consolidating part of the market. It means that the market is not necessarily telling you what it wants to do because it broke into this level, it went to that level and came back to this level. So it broke to this level, went to this level, came to this level, went to this level, came to this level, went to this level, came to this level before finally breaking that level. So anytime you're trading and you see things like this, these are not places that you trade. So what I usually term this area is a no trade zone. It's a no trade zone. Don't trade these places. Don't trade these places because the market is not telling you exactly what it wants to do. There are other traders who actually trade it, but me, I don't trade it because I'm not a scalp trader, I'm a swing trader. I explained to you last week, we've got different types of traders. We've got day traders, we've got swing traders, and we've got scalpers. Day traders are people who are holding the trading between maybe 2 to 6 hours in a day, sometimes can be the whole day. Swing traders are traders who are trading the same hours, but sometimes they can hold a trade for a day, 2 days, 3 days, a week, or a month. Scalpers are people who just get into the market and spend a few hours in the market and then they get their money, they're out. But because of what I do in my strategy, I just do swing trading. So anytime the market is moving like this, I do not trade it because I know that it doesn't give me an indication of what the market wants to do. But then the minute it breaks one of these levels, then I have to pay attention because I know that, okay, the market is trying to do something, so let me pay attention now. But yeah, we've got the bearish market, the bullish market, and the consolidation market, which we do not trade. Yeah, don't forget that we've got the bullish, we've got the bearish, and we've got the consolidation. So for today, what we're planning to start, maybe what you guys can do, if you want to take a screenshot of, actually, let me copy the whole thing. Hold on, guys. I don't know what's going on. Okay. All right, cool. Okay. Why is it not picking up everything I'm selecting? I understand this thing.
I think you
Okay.
have to move the trading box separate because it's in a box.
I'm gonna
Like
make it
two
clean
stuff.
for you guys to take a screenshot of it.
I think you have to
Okay.
move like the trading box first and then try and move the others.
Yeah, that's what I'm gonna do. Let's move this one here. Actually, let's move this one. So this one. This one here. Gonna move this one here. Then what we're gonna do, gonna move this one as well. Over there. Then we're gonna make this one over here. We can take that one out of the way. Put this one somewhere all the way up there. Yeah, this is
Yeah.
okay. So if you guys want to take a screenshot of this one, we've spoken about how to start trading, the things that you need to start trading. We also spoke about the candle formation, the close, and the open of both the red and green candles. We're talking about what a bullish trend looks like and a bullish market trend looks like. Talking about how a bearish market trend looks like, consolidation market. Then, like I said to you, if you go into the market and there's a level there, anything above that level is an indication that buyers are in charge, meaning that the market wants to go up. Anything below a level is an indication that the sellers are in charge, meaning that the market wants to go down. So that is the basics for how you're going to start your trading journey. I know we spoke about a few things last week on Saturday, but for today, trading is I don't want to bombard you with information, but yeah, make sure that you go back to the baby pips, register on there. Just be studying it at your convenient time, just to understand what the market in general looks like. And yeah, I think for today, that's what we're gonna do for today. I'm not gonna bombard you with a lot of information, but you just know that the formation of the candle, it's always done on different time frames. On the higher time frames, it takes a long time for one candle to be completed. On the lower time frames, it takes a shorter time for those candles to be completed. Anytime the candle closes above the opening of the candle, that's the formation of a green candle. And then the wicks represent the places where the candle had been in the formation of that particular candle. That's what the wick is about. Now, anytime the candle opens and closes below the opening point, a red candle is being formed, and the wick represents the places where the candle had been. So that's it for today, and I'll see you on Saturday, 12 p.m. On Saturday, on Saturday is when we are actually going to start talking about different things that pertains to trading. Actually, these ones are very simple for you to understand, because now you guys know the type of markets that you can trade. You know that you can trade the indices, you can trade futures, you can trade forex, you can trade cryptos, and you can trade stocks as well. You know that these markets, indices, futures, forex, and stocks are always closed right by Friday, but then crypto keeps running for 7 days in a week. You guys know the different time frames. You know the higher time frames, which starts from the month all the way to the hour. You know the lower time frames, which is the 45 minutes all the way to the 1 minute or 1 second time frame. The formation of the candles in the different time frames, the slowness or the fastness, it depends on the time frame that the particular candle is being formed. So if it's on a higher time frame, it takes a very long time for that candle to be completed. If it's on a shorter or smaller time frame, it takes a very long time for the candle to be completed. So yeah, that's it for today. I'll see you Saturday at 12 p.m. Unfortunately, last week what we discussed was not recorded, but yeah.
Sorry about last week. I forgot to change my timings. I saw that it's 3 p.m. So I was thinking it was still 3. Then I've checked and I've seen you changed it to 12. Sorry about that.
Yeah, that's fine. All right, cool. So Victor, if you can put a video create a channel and put the videos in there so that those who miss will be able to see as well.
Will do.
Okay, okay. No, I'll see you guys on Saturday. Take care.
Yeah, take care, man.